Hey, Think Realty, thanks so much for viewing and listening once again. Welcome to the podcast. I'm Eddie Wilson, the founder of Think Realty. Founded it in 2013. Hard to believe that it's been 11 years now worth of putting good information and content out into the real estate marketplace to help real estate investors succeed and thrive in the marketplace. We always bring great content to you. Today, we've got a great guest here in just a second, but I want to say a quick thank you to our podcast sponsor. And this podcast is brought to you by CNB Custody. CNB allows real estate investing inside of your IRA, meaning no capital gains taxes and tax-deferred or tax-free earnings. IRAs also provide an additional funding source to help avoid high-interest loans. For information, visit cnbcustody.com. That's cnbcustody.com. Our guest today is from Guardian Tax Law, Hubert Johnson. Hubert, thanks so much for joining us on the show today.
Thanks for having me.
Very good. Well, this is actually, I would say sometimes people think that asset protection, tax law, all this good stuff is boring. But when you grow up in the household that I did for 3 generations, I've been a real estate investor, and you get drilled into your head that the highest expense that you have in your real estate investing world is tax, it becomes the focal point once you have these assets. And so I actually think this is the most exciting thing because it's how you make more money when it comes to real estate. So if you don't mind, just give us a brief overview about your firm there and what you guys do.
So we help individuals with IRS and state taxes as well as SBA loan defaults. Mm-hmm. And we dabble in some foreign taxation issues, FBAR issues as well. I founded it in 2018, but I've been doing tax law since 2009.
Wow, that's great. So right now, there's a lot going on in the marketplace, and we'll jump into taxes and legal issues here in a second. But it is kind of crazy out there. You've got an election cycle we're in right now. You've got the pundits in the general housing economic marketplace saying we could be in this could be a bubble. We could be at the pinnacle. And then they're also saying, but interest rates might go down and, inventory is too low. And it's like, there's so many variable data pieces that if you're a consumer listening to this, I think it really just puts them on their hands. They just kind of sit there like, I don't really know where to go. What do you think of what's your general sense of the marketplace today? I mean, you deal with a lot of clients that are navigating a lot of interesting waters. What's your general census right now?
Well, I've been very bearish on the Fed actually cutting interest rates. Mm-hmm. And I think they're actually going to finally cut it coming in September. The market, the labor market is very soft. And it mm-hmm. wasn't just July that got revised, but the previous 4 months were all revised downward, mm-hmm. which caused the crash that we saw the other Monday. Mm-hmm. So I think the Fed's finally going to respond and cut. It might not be a big cut, but just starting mm-hmm. to go that direction will try to help get things going as far as the economy. They are still worried about inflation, but nobody is serious yet about actually cutting government spending, which is, mm-hmm. you can't stop inflation if you keep spending and printing money.
Right. Yeah, for sure. It's like they're pulling one lever, not pulling the other lever that actually causes the reaction that we want. I think what it seems like right now with what they're doing with, what Powell's doing with the Fed is it seems like he's messing more with consumer sentiment than he actually is messing with economics, right? Because everything that came out after the fact that he said, okay, we're going to hold steady once again, you see this, it affected us, but it affected places like Japan and otherwise when you see the softening of the dollar. And then the knee-jerk reaction of that, seemingly knee-jerk reaction is potentially there's a cut coming, right? And it's but also this feeling of but you can't cut too much because, inflation is still not exactly where we want it to be. So yeah, it's interesting, just where we are today is very almost uncharted territory because of all the economics at play. Let's jump into taxation. So I've been told my whole life the largest bill you're ever going to pay inside of real estate is going to be your tax bill. So what are some ways that we can mitigate our risk within taxation and real estate?
Well, proper planning. That's the number way. One way is protecting your assets from, you need to protect your assets. You need to plan for the future. You take advantage of huge tax savings that are out there. And the biggest ones, most people are already familiar with for individual taxes, but setting up for a step up in basis through estate planning as well. Those are the biggest benefits long-term to avoid huge hits to capital gains.
Yeah.
But using trust planning to protect your assets, I think is a big missed issue out there. And we deal with that a lot where people have trust that are defective or aren't done right.
Yeah. And is that primarily what you guys do? Like, I mean, I know you kind of do it all, but do you spend a lot of time with clients in that space?
We don't. So we're very specialized in that we specialize in dealing directly with the IRS and state collection agencies. So we don't do a lot of tax planning.
Okay.
We do work with people that are already in trouble. So helping people, but we do deal with a lot of tax liens, helping people buy, sell, refinance with tax issues. But we're usually the firemen putting out the problem and dealing with the mess.
Got it. That makes sense. So give me a case study right now. What's something that you're working on, or help our listeners and viewers kind of like visualize whether or not, Guardian is somebody that they should be having a conversation with?
Well, classic story. We had a gentleman that hired us because he had tax liens and he was only a 1/3 owner of the property. And he was hoping to just sit there until the tax liens expired. Not a bright idea. He ticked off the majority partner. And so the majority partner was just going to sell. He said, well, hold the phone. You can save me, 50 to 60,000 if you just are a little patient. He said, fine, I'll wait. And so we reviewed the case, and sometimes we could do an offer and compromise and wipe out the balances. In this case, he was coming up on the 10-year statute of limitations with the IRS, and they're called CSEDs. And the funny thing is that we verified exactly when the CSED was going to happen. Word to the wise, the IRS in the last few years has changed their procedure. They are reviewing and recalculating the CSEDs right before they expire. So when we thought they were going to expire, they didn't expire. We followed up on that to make sure, and then they still grabbed that 60,000 he was supposed to save from him. We appealed it, got in there and got most of it reversed. So we got him 37,000 back, and we could have appealed it even further and fought for the other, I think 14,000 or something like that. And he said, I'm good. I don't want to fight it anymore. Yeah. But you can't trust the numbers that the IRS is coming out with, and the IRS is giving worse information every day. So that's one of the biggest frustrations that people have. They call the IRS, they're told something, and half the people there don't know what they're talking about.
Wow. That's extremely frustrating, I'm sure. We have a lot of realtors that are a part of this community. We have real estate investors. We also have realtors. And I have a note here that says that you can help realtors protect themselves from higher interest rates and estimated tax penalties. What does that look like, and how can you help real estate, it's actual realtors?
Well, part of it is helping people plan. And our goal is that we don't get repeat business. So we go and we fix the problem, and then we get people on a good little path where they're not going to have issues moving forward. Now, realtors are very bad at not having their own finances together. So I did another podcast a while back, and I asked gentlemen, do you know what your profit was last year? Right now we're in August. Do you have an idea what your profit was for the first 6 months of the year? And most of them have no idea. So you're supposed to be doing regular profit and loss statements, having your bookkeeping done, and it just makes things easier, and it helps you plan throughout the year. But Congress, in their great wisdom, sarcasm alert, jacked up the interest rate for the current year taxes from 3% to 8%. So most of the people, when do you have to pay your taxes? What's the deadline for it?
Well, April, unless you file an extension, and most of us that have businesses, we're paying in October.
The deadline is actually well before April 15th.
Oh, the deadline on payment for taxes, not filing.
Well, past April 15th, you get hit with penalties for failure to pay timely, even if you file timely and pay timely by October 15th. And it's one of the worst penalties, the second worst, actually. But the new thing that people are getting really hit with is failure to make estimated tax payments throughout the current year. Right now, we're in the third quarter for paying estimated tax payments, and the deadline is coming up in 1 month, September 15th. So if you are not paying your taxes throughout the year, you're going to get hit with an 8% interest penalty. That's going to surprise a lot of people because it went from 3% previously to 8%. And most people don't understand that the deadline to pay is in April 15th. You're supposed to pay every quarter.
Sure.
And it's not straight 3 month quarters anyway, so it confuses people.
Sure.
But just like the W-2 earners have their taxes taken throughout the year, it's your responsibility to pay your taxes throughout the year. And a lot of people aren't doing it because they don't understand. The penalty was very low forever, so most people thought, hey, I'm getting more interest. And most CPAs would tell this, why pay the IRS early? This is why, because now interest rates have shot up.
Wow. Wow, that's crazy. That's if you're listening to that right now, I would highly urge you to take action on that. I know that I need to make a note real quick to text my CPA and make sure that we're staying ahead of that as well, because that is very, very crucial information. 8%, jumping 5% is a lot in taxation, right? Like I moved to Florida last year primarily to alleviate my state tax, right? And I could have just erased all of that by not paying my taxes quarterly, like you're saying. Interesting. So when you are, let's say that they have actually received some notice from the IRS, they owe, they're given some sort of a statement as to something that they owe or something that they've missed. Is this an appropriate time to give you guys a call to see if there is some sort of mitigation on that? Is that kind of where you get a majority of your calls?
When people get letters, notices from the IRS, we also have people, realtors that have buyers that have tax issues, and we can either settle the debt or, believe it or not, a lot of mortgage brokers will actually set up and get people in a mortgage, even though there's tax debt once it's set up in an installment agreement. At least you have some kind of resolution. And we have plenty of cases where we've done that for our clients, help them get into a home, and then we might do something different afterwards.
Yeah. I have a note here to also ask you about buying, selling, and refinancing property with tax liens. Could you kind of give us some of the wisdom and insight on that?
Absolutely. So we have a client recently. He needs to sell a property. He has tax liens on the older portion of it, but he also wants to sell the property and take most of it and reinvest it. So we're helping him to sell it quick before the IRS hits him with tax liens on the newer debt. And if you have tax liens, it's a fairly simple process because, believe it or not, the IRS wants you to be able to buy, sell, and refinance because every time there's a transaction, they're more likely to get paid.
Sure.
So their tax lien unit is one of the better units in the IRS. Their service is atrocious right now, but the tax lien unit is pretty on top of it. If you need a payoff letter, if you need to get a tax lien removed, if it's there improperly, we've done that, as well as getting them doing what's called a lien subordination. So if you're trying to refinance and you have tax debt, they will do it even though they're not getting any money if it helps you financially and lowers your interest rate. Not something that's happening too much now, but if they cut rates, people might be refinancing again.
Sure. Yeah, for sure. Very good. Any last kind of piece of advice for real estate investors before we sign off? Is there anything that you would just say to a general real estate investor, like, hey, be cautious about this, or, take action on this? Something else?
Well, again, check your tax liens. Yeah. Check your history, your title history. Make sure you know what's on your property, and if it's recorded with the county recorder, it needs to be dealt with before you actually engage into a transaction. I don't know how many times people have called us and said, look, I have a sale happening in 2 weeks, closing is in 2 weeks. What can you do? Not much.
Yeah.
So plan ahead, call us early, get that information so we can do a lot given enough time. But if you want something at the last minute, it just makes it all that much harder. We can do it. But my big takeaway is if you have questions, call, get some free advice before you step in a bear trap. And we see people do that all the time. We do a free consultation So we give out free advice all the time just to help people and steer them in the right direction. That's
Very
our give
good.
back to the community.
Awesome. How can they get in touch with you, and how should they reach out?
Our direct number is 520-485-7371. And our website is guardiantaxlaw.com. And we have our YouTube channel there with plenty of shows. I do a daily show myself that's all being posted to our YouTube channel. And we're now expanding into Phoenix as well.
Very good. Awesome. Hubert, thanks so much for being a part of the show today. This is a service that I'm sure many of our investors and people need. So if you don't need it now, make sure you take the information down because you might need it later. And if you need it now, go ahead and reach out to Hubert and team. I know that they'd love to help you out. Thanks so much for being a part of the show today.
Thank you for having me.
Absolutely. One last thank you to our podcast sponsor, CMB Custody. CMB allows real estate investing inside your IRA, meaning no capital gains taxes and tax deferred or tax-free earnings. IRAs also provide an additional funding source to help avoid high interest rate loans. For more information, go to cmbcustody.com. That's cmbcustody.com. And also, if you haven't taken advantage of our Think Realty Plus program, our Think Realty Plus program is built for real estate investors. And it gives you everything that we have to offer at Think Realty. It gives you access to our magazine that comes to your doorstep every single month with great content, resident experts writing there, economists writing in there, just great data and information for you to make great choices. Secondly, we also provide access to our resident experts. Our resident experts get on every single month, do specific calls with you. You can ask them questions. And then we record a ton of content